Hello and welcome to the next of our full course lectures. This lecture is looking at sales tax. Don't forget you can download all of our mind maps shown here for free on our website www.mapitaccountancy.com. So what do we need to know about sales tax? Well, sales tax is a government tax. So the government applies sales tax. However, it's collected by the business. So for example, VAT, value added tax, would be an example of a sales tax. So it's a government tax, but it's collected by the business, such as VAT. So the different types will be input tax, and input tax is charged on your inputs, i.e. your purchases, and output tax is charged on sales. So for example, in the UK, VAT is charged both on your inputs and your outputs. So VAT's charged on your purchases and VAT is charged on your sales. Now do note that this sales tax is excluded from sales on your income statement. So when we produce our financial statements for the year, we don't have our tax included. So the sales revenue will be net of that tax. So what about paying this tax then? How does that work? Well, the tax is paid by the business to the government. So the business collects the tax and then pays it across to the government. So the amount that will be paid will be the net amount of the output tax collected less the input tax paid. So remember we said that tax will be charged on your purchases and your sales. Well, you'll have paid tax on your purchases and you'll have received tax on your sales. The net of those two, the sales tax less the purchases tax, will be the amount that you need to give to the government. So that's what we're looking at here. It's a sales tax, it's charged on your purchases and your sales, and we pay the net amount across. The business collects it and pays it to the government. So how do we charge this sales tax? Well, the tax will be charged on the net selling price. So the net selling price, remember, is the amount that the business will record for sales, for example. The sales figure in our income statement will be net of the tax. So that's the amount that we record as our revenue, the net selling price. To get the tax amount, we multiply the net selling price by the tax percentage. So if we had 100 million of a sale and our tax percentage was 30%, well then the tax would be 30 million. So the net selling price times the tax percentage gives us the tax amount. If you see reference to the gross selling price, well, that is the total amount. That's the net amount plus the tax. So the net amount plus the tax equals the gross selling price. And that's the total that is charged to the customer. So the difference between the gross selling price and the net selling price is paid to the government. Now you need to be very careful in the exam as to whether the examiner has given you the net selling price, i.e. the amount before we calculate the tax, or the gross selling price, because the gross selling price will include the tax and you'll have to work it out differently. So let's see if we can deal with that now. We're going to look at illustrations 1 and 2 in your workbook. If you want to, have a go at them and then work through the answers with me to try to get the difference here between our net selling price, our gross selling price, and calculate the tax that will be due. So looking now at illustration 1, we can see that John has sold the following goods. We've sold to Jack at a tax inclusive price of 200 and Jerry at a tax exclusive price of 500. So this is where we need to be careful what the examiner gives us. So first of all, we're looking at the tax inclusive price. So that 200 includes tax. So we need to work out what the tax is. So the tax in the 200, well, the 200 will make up 120%, and we're looking for 20% because the tax rate is 20%. So the sales to Jack include tax, so the 200 times 20 over 120 will give us the answer, which is 33.33. So 200 times 20 over 120, or you could divide the 200 by 120 to get 1% and multiply by 20. Whichever way you do it, the answer will be the same, 33.33. Now the next one in part 2, we're told that Jerry has a tax exclusive price of 500, and that's easier because that's simply the net price, the 500. So we take that and multiply it by the 20%. So 20 over 100, or just the 20%, gives us 100 in sales tax on that one. Added up, and the total expected here is sales tax collected of 133.33. So just be careful as to whether the sales include tax or are exclusive of tax. So looking at the answers, the answer is solution 4 for illustration 1. Looking then at illustration 2, we're told that Jill purchases goods for $180,000, including sales tax, and sells goods for $240,000, including sales tax. A tax rate of 20% is applicable. So see if you can pause the video now and work out what the tax is on the 180 and what the tax is on the 240, because both include tax, so you'll have to do a calculation to work it out. So looking at, first of all, the purchase of goods was 180,000. To get the tax out of that, well, it included tax, so we'll multiply by 20 over 120. For the sale of goods, we'll do the same, and that means that the sales tax on the sale of goods was greater than on the purchase of goods, and what happens is we pay the net amount. So the sales tax on sales was 40,000, the sales tax on purchases was 30,000. That means we pay the difference to the government because our sales tax was greater on the sale of goods than the purchases. So that's how we deal with extracting the tax from the balances. So we now know how to work out our net and gross selling prices. How do we record this in our ledgers? What are the journals to record a sale which has got this sales tax on top? Well, let's say first of all it's a purchase. So let's deal with purchases first of all. The entries to deal with purchases will be that we will debit our purchases with the net amount. So that is the amount less the tax. So it's the net amount. We'll also debit sales tax with the tax amount. So the gross amount, remember, is the amount that we paid. So that will include the cost of the purchases and the sales tax. We debit the purchases with the net amount, and we debit the sales tax with the tax amount. Then we credit either payables if we haven't actually paid it off yet, or cash if we paid in cash, with the gross full amount. So we split the debit between the purchases and the sales tax, and we credit the payables or cash with the gross amount. When it comes to our sales, we do the same. So we debit our receivables or cash with the gross amount, depending on whether we were paid, and we credit then sales with the net amount of the sale, and we credit sales tax with the tax amount. So that's how we record purchases or sales that include sales tax. We need to split it between the net amount going to our purchases or our sales and the tax amount which goes to our sales tax ledger account. So let's see if we can post those journals for illustration 3. This time do have a go at this, post the journals and then work through the answer with me. In illustration 3, we're making sure that we can record these transactions accurately. So we have purchases on credit and we need the journal entries here. So we will debit purchases with the net amount. We'll also debit the sales tax with the sales tax amount, and the credit will be to a payable of 120,000, the gross amount. When it comes to the sales, we do the same. We first of all have a receivable of 180,000, that's the full amount. But we need to split the sales of 150,000 and the sales tax of 30,000 for our credit entry. So make sure you're aware of how to post those journals where there is tax included on sales or purchases. So we now know how to calculate our net amount, our gross amount, and our tax amount. We also know how to post the journals through if we have purchases made with sales tax on them, or if we have sales made with sales tax on them. Another aspect we need to look at then is the payment that will be made. At the end of the year, what we will do is we will balance off our sales tax ledger account. Now, in that account, if our output tax exceeds our input tax, i.e. the amount of tax on our sales exceeds the amount of tax on our purchases, well then we make a payment to the government. Okay, so we pay to the government if our output tax exceeds our input tax. So we debit sales tax with the amount paid, and we credit cash with the amount paid in that instance. So that should balance up the sales amount. The balancing figure will be the amount that we pay to the government. If our input tax exceeds our output tax, i.e. the amount we had on our purchases was greater than the amount of tax on our sales, well that means we're going to get a refund from the government because we've paid too much sales tax. In that instance, we'll debit cash with the amount received, and we'll credit the sales tax account with that amount received, which effectively will be the balance on that sales tax account. So let's see if we can do all the calculations for illustration 4 and come up with the amount that's either payable or receivable. In illustration 4, we're looking for the balance on the sales tax account. So really it will be the net of the sales tax on our sales and the sales tax on our purchases. So we need to work those out, and we need to be careful because some include tax and some exclude tax. So we need to keep good track of it and then see whether the tax on our sales is greater than the tax on our purchases or vice versa. So starting with the sales, well, we have 550 sale of goods excluding tax. So that's simple. We take the 550 times 20% to get the tax, which is 110. The sale of goods of 900 includes tax. So that one we need to multiply by 20 over 120 to get 150. The 945 next excludes tax, so simply multiply by 20% to get 189. And lastly, the 660 includes tax, so we multiply by 20 over 120 to get 110. Add it up and we get 559 for our sales tax on our sales. Now looking at our purchases, well, the first of these is 1055 and it excludes tax. So times it by 20% and we get 211. Now the rest of the purchases, well, they all include tax. So we have 720 times 20 over 120 to get 120. We have 420 times 20 over 120 to get 70. And we have 1140 times 20 over 120 to get 190. If we add up the total sales tax on purchases, we get 591. So we can see that the sales tax on our purchases exceeds that on our sales. It's greater. We've paid more tax than we received. So that means that we're going to receive a refund from the government, and the amount receivable is the difference between the two, which is 32. So just be careful with the amounts as to whether they're inclusive or exclusive of tax, and then be careful as to whether you have paid more tax on your sales or have more tax on your purchases, because that will determine whether you get a refund or whether you make a payment to the government. The last area I want to point out when it comes to sales tax is discounts. So we're talking here about discounts for early settlement. Now, what we need to remember here is that sales tax is always calculated on the discounted amount. So I know when we get early settlement discounts, usually what we do is we record it at the full amount and then we have a discount account. Well, when it comes to sales tax for early settlement discounts, we always calculate the sales tax as if we got the discount. So even if ultimately we didn't get it, well, we still calculate the sales tax on the discounted amount. So we assume that the discount is taken up. So the process to do that will be to calculate the net amount, deduct the settlement discount, and calculate the sales tax on that discounted amount. So when it comes to discounts, look out for that in a question, because we always calculate our sales tax on the discounted amount. We assume that the discount was taken up, even if ultimately it wasn't. That's the amount that we calculate the sales tax on, the discounted amount. So that was our session on sales tax. Make sure you can calculate the amount of tax, whether you're given a gross amount or a net amount. Make sure you know the journals for posting purchases and sales with sales tax included. And make sure that you can calculate whether there's a payment due to the government or receivable from the government based on the information that you're given. Also, try the test your understanding questions at the end of this chapter to make sure that you fully understand everything that we've looked at.